So I have my presentation all queued up and ready to go, but I got to tell you something. So some of you might know my crypto Sherpa, Jared, and Sam, who helps me out on the future side of my life. And I just heard that North Korea fired a missile over Japan. So I'm not going to turn this into an active trading session. We've got plenty to talk about. But I've got to tell you, we have had some positions that have triggered with the very tools that I'm going to show you guys today that are happening right now, giving us some great follow-through. In fact, quick shout out to any of my Simpler Futures members in this room. Gang, we hit our $59.95 profit target. So I got to tell you, please take something off the table right now. We have hit that 40-point profit target. So hey there. Yep. So please move to the break even. The levels are in the spreadsheet in the members area. So we are seeing a little risk aversion. Those of you that grabbed that gold position today, we're getting that follow through. This is now, wow, this is now about 12 points in our favor at the moment. So very, very interesting turn of events. And everything that I'm talking about right now as this market is reacting to this North Korea story, I'm like stoked. I'm ready to start trading. This is just a fantastic move in our favor. It's a horrific event. I mean, this is just not the kind of thing this world needs right now. But on the flip side of that, you know, that's the thing. We look at the opportunities in the market. We take advantage of them, and that is happening in a big way right now across a number of positions we took today. So, you know, let's just get to it, okay? Even our dollar yen gang following through very nicely on the risk aversion. All right. So what are we here to talk about? Gosh, that's just wild. We're here to talk about obnoxious world leaders? No, obnoxious profits made simpler. All right, so that's the topic. As Daryl mentioned, I will make sure we leave some Q&A, but I've got a lot to go over, and what a better intro than follow through on some trades that we actually took today based upon the exact tools that I'm going to show you right now. So let's get to it. Now, the obnoxious, I had so much fun creating this presentation for you all, and it's even more exciting because of what's happening at the moment, and it's really a walkthrough what's been my 30 years of trading and thinking about how I've tried to simplify my process, how I've tried to automate things to make them objective, to find clarity in the best way possible. So I'm actually looking at the markets right now because a lot of these positions are moving very swiftly in our favor. So I feel like we're in a live chat session right now. Okay. We good on audio and everything? Okay, great. So I'm going to be using TradeStation charts. Bob, to your question, but I'll answer some questions about the other platforms a little bit later on, all right? So let's talk about clarity, because if there is any theme that we're going to see across this conversation here today, my mantra as a trader since I was 16 has been clarity, and clarity is fast. Clarity doesn't make you second guess, right? It's objective. It's got to be easy. It's got to be at a glance. I don't want to have to, I think the longer you stare sometimes at a chart, you start to see things that aren't there. So I think there's a certain amount of advantage to speed. For those of you that are intraday traders, you're going to love this because we don't have the luxury oftentimes of time. I'm trading oftentimes 4 asset classes: Forex, futures, equities, ETFs, and then options on the last 3. So I don't have the luxury of slow analysis. It's got to be fast. It's got to be at a glance. It's got to be intuitive, right? It's got to feel comfortable. And for me, that was always kind of directional indication and color-coded candles. Some of you that know my approach know I'm a big fan of just that color-coded approach. You're going to meet my grab candles today. It must be simple, right? And what's the enemy of simple? Complication. And I have found over time, complication really is fear in disguise. Why do we question? It's fear. It's the pig in the head. You know, oh, I don't have enough information, or I need one more indicator, I need one more filter. That's just fear, right? And fear just does not get us to where we want to go. Fear brings your worst nightmares to life. All right. So it's going to be hard for me to do. Hey there, Ralph. Oh no, Ralph, you mentioned it's going to be hard for me to do the presentation. I'm jacked up right now. You can probably even hear it in my voice because everything I'm going to show you guys we set up today. I'm totally stoked. I've just gone into another level here. All right. So again, it's got to be simple. And I got to tell you, when I started trading, just to give you guys a little background on what I mean by simplicity and speed and at a glance, I was really full-time trading in college. And I was trying to keep my Indian mother happy. And if any of you are Indian, and you know what I'm talking about, college is a big deal. I had to get through college, good grades. My sophomore year, I was pretty much trading full-time from my dorm room. Hand analysis, calculator, pen, ruler, and probably my second semester, I realized I was out-earning many of my professors. And I'm thinking, why am I even here? Oh, right, to keep my mom happy. So I had to somehow manage to graduate college, which is a task on its own, and I had these positions in the markets where I knew I'd found my calling. So the speed was a necessity. Oh, and oh, by the way, I was also running a business at the time. So speed and simplicity was absolutely mandatory. And, you know, you want to be able to get that clarity without going cross-eyed. And that was very much my life. Clarity without going cross-eyed. And that meant my charts had to be simple to read. So let's talk about what clarity actually is. I love cats. That's the other theme. Ginger tabbies. Ginger tabbies. Cats rule the internet. They absolutely do. So drink some of that water. I think this might be just market. Yeah, Rudy, I love doing this. Right now, this is usually my wind down period of the day. I'm looking at the Asian session and yeah, I'm ready to go. All right, so what is clarity? Again, that's our mantra. What is clarity? We're always striving for this. Clarity is just a number of things. It's identifying trending versus non-trending markets. That sounds like a pretty basic thing, but when you think about it, when I first started trading, there wasn't an indicator, there wasn't a methodology, there was no strategy for me to say this is a choppy market versus a trending market that I could do at a glance, right? That I could do quickly, objectively, simply. I just didn't have it. So I had to go about creating something like that for myself. Identifying the quality of the trend. How good is the trend? Is it a choppy trend? Is it an erratic trend? Does it have smooth follow through? Because that's going to dictate position size and my confidence. All right, what about non-trending markets? What about once I reach a range-bound market, how do I identify the actual limits of that range? Then what about when trends transition? You know, what's the difference between a retracement and a reversal? That's a nightmare for every trend trader. How do I not get trapped into that? You know, everyone knows BTFD right now. How do I not get trapped into buying the dip when the market is actually reversing and not just retracing? So, you know, this was a big part of not getting caught up in just blindly BTFD, right? Okay. So what else? Trend continuation, which is my bread and butter, which is a lot of the positions that I have on right now, and exhaustion levels. The short in the QQQs and the NASDAQ that I have on right now that hit my profit target as we speak. Who knew? That is identifying exhaustion levels. Market clarity mandates that we recognize that different psychologies have different price action and organization looks. And again, the simplicity of the indicators I'm about to show you, they're color-coded. They're directional. They've been tested by my neighbor's, I think he was 11 at the time, Christopher just graduated college. But Christopher was kind of my first litmus test for, is this so easy a kid could do this? Matter of fact, it was. And identify those acceleration levels. Daryl, whom introed here, Daryl helped me find I felt like Indiana Jones, you know, kind of going into the archives of classic tools that John's had, and we kind of unearthed something that shows when the market acceleration, the near-term acceleration is in place. I'm going to show you that one today. This one is one I haven't shown really anybody. So these are tools of market clarity, and they've got to be simple. They've got to be at a glance, and they all are, I think, with the indicators that we're combining, it's about as simple as my trading has ever been. And this is 30 years in the making, gang. All right, so let's start off with support and resistance. And my take on support and resistance is a little different, because what I look at when I'm viewing support and resistance, there's really only three things that happen. Any line or level, and I mean any line or level, whether you are drawing a trend line, a horizontal line, if you're looking at pivots, if you're looking at fibs, if you're looking at patterns, anything that we take the time to draw on our charts, anything. The reason we're doing that is we're expecting a reaction. And there's only three things a market can do at those support and resistance or reaction levels, those decision levels. They can accelerate through, they can exhaust at, and they can reverse from. That's really it. Now, you might say, well, great, Rog. I draw support and resistance on my charts. I see them on yours. How do I know what to do at those levels? And that's exactly what the grab and the wave and the tools I'm going to show you can do. So what is acceleration? Let's just talk about this really briefly, because I want to get to the charts here. What is acceleration? For those of you that like momentum plays, think momentum breaks through ceilings, right? Think momentum breaks through floors. So if you have a resistance level and we break higher through that, that's Momo. If you have a support level and we've been bouncing on it and then we finally break down through it, that's Momo. You'll hear me refer to this, Momo. That's acceleration, accelerating through a level. My favorite kind, when I met John, gosh, 2001, maybe 2002, I'm trying to remember. And he'd come to Fort Lauderdale to do a presentation, and that was the first time I saw the squeeze. And this was back before the squeeze got, evolved into the really easy to read indicator that it is now. This is back when it was the individual movement through Keltner and Bollinger and everything else. And I sat there watching this guy going, wait a minute, he just decoded momentum breakout breakdowns. He just decoded the way in which the market breaks ceilings and floors. In fact, he figured out before everybody gets in here, how does he get in here, right? Before everybody gets in here, how does he get in here? And that's when I realized, oh, this squeeze is the way I want to focus on the way I can take advantage of consolidation. And acceleration and momentum is a function of consolidation, and I'll be able to show you how to recognize that really easily. All right, next one, exhaustion. Think overbought and oversold. My QQQ play, I'm going to show you that today. It's exactly what we took advantage of, fading floors and ceilings. What kind of tools do I use? I have a matrix, like an indicator matrix really, that when the markets are looking a certain way, I have a list. I literally have a list that I can go to, almost like quadrants. Okay, sideways market, overbought, boom, I have a matrix, right? So this is a kind of brief glance at a matrix mindset where, all right, think overbought, oversold, what type of strategy, what type of indicators, right? This is how I would play exhaustion. And again, that's the QQQs. Oh gosh, crude oil. I have to take a look at crude. We took a short in crude today as well. Okay, reversals. So I mentioned this is the big fear of trend traders. How do we know when we should buy the dip or sell the rip versus when the trend has lost clarity? Intraday, end of day, again, there's a matrix for this. First of all, think transition. A lot of traders think that a broken uptrend is actually then a downtrend, which is incorrect. There's actually 4 market trends in any market, and that's courtesy Charles Dow, and this is 100-year-old Dow theory. So how do I know when a market is transitioning? What kind of tools would I use? What's my early warning? How do I not get caught up in those types of moves? So that's the reversal. And again, this is a quick look at the matrix that I use. All right, so before I start to kind of overwhelm you guys with just the ideas, right? So you might be thinking, okay, you know, most of, you know, early on, most of my struggles were, well, it can't be really that simple, can it? Well, yeah, I mean, some part of your brain might go, it can't be that simple. It is, all right? So let's talk about some examples that I'm going to show you right now. These are repeatable, right? Once you understand what the grab candles are telling you and the wave, once I show you the kind of decode what these indicators mean, you'll be able to find these same setups because it's like cookie cutter. It's repeatable. You look for the color, you look for the direction, you look for certain signals, and boom, it's the trade really just kind of builds itself. All right? So looking at YY, and every one of these charts, gang, are entries that we have either set up in the chat rooms. We've talked about these. Some of these were requests from the chat room. These are trades that we have taken together. So I thought, you know, what better way to do this than to really grab some very, very recent trades. And I mean the last 3 or 4 weeks. And so I'm going to bring up YY because this is one of the charts I get asked about a lot. And for those of you who are wondering, is this just futures and Forex? No, this is everything, gang. This is about indicators that study the psychology of price. Right? So this is YY. So taking a look at this right here, what I want you to, just for now, notice is the way in which price action interacts with these automated support resistance levels, the color of the candles, mostly green, which is telling me, as my husband likes to say, green means go. So look at the colors, think about the dominant psychology, and every one of these lines and levels is completely automated. Everything here is completely automated. So if I see mostly green and I see a pullback, what am I going to do? I'm going to look for buy setups. When I see certain kinds of colors, it's going to change the type of buy that I'm looking for. So just the color-coded candles give me direction. I know I want to buy. The shift in the colors tell me I want to buy, but I probably need to be a little bit more conservative. And then my moving averages, which is what those green, blue, and red lines are, tell me the zone that I'd like to buy or sell in. And then the automated support and resistance levels give me where I will most likely want to buy. And you're going to get a tremendous heads up. This was one of the levels we were looking at. This was one of the levels we were looking at. So when I talk about an objective zone, I really mean these are objective zones. What about Baidu? This is probably the one I get asked about every day. We had a signal on Baidu the last week of August. This was something that we had been talking about when this market was flirting with this 230 area. And, you know, one of the interesting things about the way in which I'm going to show you how to trade is when everyone else is in FOMO mode and they're paying up, you're going to be able to sit back and say, you know what, I know a number of things about this market. One, it's in a trend. I know that. I can see that based upon the color-coded candles. I'm going to show you how to read those. I can tell where the zone is based upon the lines of these moving averages. I can tell this market's hitting the gas pedal right now based upon these dots. And I know my zone. It's confirmed by some automated support and resistance. I know the trend. That means I can just park a limit order and wait for the market to come to me. For those of you that read The Market Wizards, one of the lines from the original Market Wizards book written by Jack Schwager that always resonated with me was one of the Market Wizards said, you know, a good trade is literally like sitting in the office and they see a bag of money sitting in the corner and all they need to do is get up out of their chair, walk across the room and pick it up. The market has to come to me. So when FOMO mode is going on up here and people are paying up, I park a limit order in my zone and I wait for the market to come to me. And when I tell someone who's just bought at 230 that I'm waiting for something around 215 to 217, they look at me like I'm crazy until we trigger 215 to 217, right? And I'm going to show you how to recognize those opportunities because it's all about the color-coded candles and the charts. All right, so that's Baidu. Here's OIH. This has been a tremendous trade for us, and I'm using this example not to show you previous entries because there were about a half dozen of them. But what I'm also here to show, I mean, this was a blast for us since about March, April on. You know, this is a very easy way to play the crude oil story without getting caught up in all the OPEC shenanigans of crude oil. But the reason I'm showing you this is we know when to shut it down. You know, one of the things a lot of trend followers or trend following systems where the wheels fall off the wagon is they don't know when to minimize position size because the trend is losing clarity. The trend lost clarity back here with a single green candle. That was my warning. And then from then on, I can do a few things. I can play smaller position size. Warnings are great. They're necessary. They're going to keep me from getting burnt too bad when this finally happens. And I want to mention something to everybody here because there is this concept of the one last trade. At some point, you're going to notice that every system is just going to transition. Every approach is going to somehow transition on you, and you're going to have that one last trade. You might have had 4 or 5 winners, and then boom, there's that loss. That happens. That's just part of trading. But if you knew to start minimizing your position, if you knew that, oh gosh, you know, I probably need to put certain symbols on our do not watch list. We put OIH on the do not watch list 3 days ago. 3 days ago. That was our heads up. We knew the one last trade was coming up, and we had an awesome heads up 3 days ago because of the wave and the grab candles. And also the market started doing what? Notice the dot stop plotting? The market let off the gas pedal. This is my cue. The market let off the gas pedal. It's nuanced, but gosh, that sure does help. And for a lot of you, this is the first time you're seeing my magical dots, my magical little propulsion dots. Okay. So let's see. I'm just kind of taking a quick look at the questions here. And I'll make sure I scroll through these, gang, before we're done. All right, so next up, and that was OIH, by the way, gang. Next up, gold. Now, we just got into gold today at 13.25. This was a trade that was in the spreadsheet within the members area. It was an aggressive trade for my members who had not already bought at 13.07. And we've been buying pretty consistently. In fact, you see these arrows right here? These are actually leftovers from my own notes. This is a small buy. This is a slightly larger buy. And as the trend organizes and I get more consistent green grab candles and the wave continues higher and I get my you know, the market's foot is on the gas pedal, my position size gets a little bit bigger. We actually put a pretty sizable position on at the 13.07, which was the previous conservative pullback. So that was a really nice buy for us. That was just one of the most recent conservative buys, and that thing was, you know, worth, you know, 45 plus points for us. We just grabbed 13.25, and a lot of you probably could tell me where gold is right now. In fact, I'm just really curious because we have quite a few traders in gold at the moment. And let me switch to live charts. Yeah, here we are at 13.36, so pretty decent move there. But it was the dots, the grab, and some automated support and resistance that started to give us insight into where and why we should buy a pullback, okay? So again, it's really just 3 tools here. It's a series of moving averages, automated support and resistance based upon really a 60-year-old principle that I first learned about when I was 17, and I used to draw them by hand for years. And then Daryl showed me we had it automated. And I think the first thing I told him is, where had these been all my life? And as long as these grab candles are green, remember, green means go. I'm not going to look to fight the trend. It's bullish. I'm not going to start to look for shorts. I'm going to take advantage of pullbacks and get long. So that is what's going on gold right now. CINA, you know, I'm going to talk a little bit about the KWEB ETF a little bit later because I think it's really important that I give a lot of you NASDAQ traders and NASDAQ stock traders and NASDAQ futures traders a heads up about when the QQQs and the NASDAQ futures could start to rally. It has a lot to do with KWEB, and CINA is one of those much talked about Chinese internet stocks. That's part of why I think names like Amazon, Facebook, Google, etc. are struggling to find flow. And this was a chart straight out of the chat room. And if you take a look at the green grab candles, as soon as you see green, you're thinking, where's my next buy? Whether it's a momentum buy or an exhaustion buy, you can set up both. If you like breaks through ceilings to get you long, we can do that. You just want to make sure the grab candles are confirming it. You want to really make sure the gas pedal is starting to get, this is the market tapping the gas pedal, starting to, get a little heavy-footed here. These little dots, these pink dots. Basically sinking into the wave and finding that dynamic support. That's what an exhaustion trader likes. There's a lot of different kinds of buys, but what do we know? We want to deploy a buy strategy. And then when we look at the automation of the support and resistance, every one of these lines is automated. Every one of these support levels is already sitting there. So you just wait for the market to come back to it, which means you know the price, you can park the limit, and a lot of you know my other mantra besides clarity is park and modify. Make the market come to you. Again, imagine getting up, walking over to the corner of the room, and picking up the bag of money that's sitting there. Straight out of Market Wizards. Good advice. So that's Cena. So pretty stoked with just a handful of these examples. And I got to show you my absolute favorite. This has been the gift that keeps on giving. This is the euro. A lot of you know about my euro trade because I've been pretty much jumping up and down, pounding the table, practically begging folks to just think about what the euro throughout 2017 was going to yield. And I called this in January and said this is going to be the biggest trade of my year. And it ain't done yet. The cool thing is there are some other examples of other markets. You could look at the FXE ETF if you're not a Forex trader. You could look at the Euro FX if you're a futures trader. There's a lot of coordinating markets that are going to work with this, the DAX. But this one is pure wave and grab and acceleration, just textbook. I couldn't have even dreamed it any prettier than this. So let me just give you an idea. You need about 2% margin to control a single contract of what's known as the euro currency, the euro FX versus the US dollar. And you don't have to play Forex. There's an ETF, there's a futures contract. But what I want you to focus on here is how persistent the green grab candles have been when the markets hit the gas pedal. So you kind of start to really pay attention. How often we keep plotting brand new 52-week highs. The dynamic support for every one of these conservative pullbacks to the wave since April. This market, I've been calling this market to head to 125. That's not my personality. Okay, that's not my personality. But we are conservatively 1,200 pips into this trade per contract. 1,200. Okay, that is 1,200 times $10 per pip. This is per contract, gang. Okay, so we pulled back a little bit. I mean, we were up at 121, and that was then $1,300 per pip times $10 per contract. All right, so this has been a monster trade. I still think it has about 500 or 600 pips easily to go. And that's going to tack on, I think when this thing is said and done, I'm going to be somewhere in the vicinity of about, I don't think I'm exaggerating to say we might be 1,800 pips into this, 1,800, maybe 2,000 pips, again, times $10. And all I've done is understood a little bit about the narrative, and I've just followed what I see, trade what you see. But you got to trust what you see, and it's got to be easy to understand. Green grab candles, pullbacks, some cues about where the market's starting to, hit the gas pedal, and we continue to ride this higher. So this has just literally been the gift that keeps on giving. This has just been my favorite. That one is going to make my year, and I do think there are a handful more of positions like this to come. Okay, so next up here, and thanks for the questions, gang. I am going to go back and we will make some time to tackle these. I just want to make sure we cover. So how do I do this, right? This is why you're here. Let's get to it. You've seen examples. Every one of these have happened. Gosh, some of these happened today. I've got my eye on my other screen here, watching the NAS and the gold market. So some of these were positions that were taken just literally in the last 24, 36 hours. So how do you do this, right? Before and after. So I find that a lot of traders early on, you know, where's my position? This was a cat swimming through the floods in Harvey, and I like this attitude. Man, there's no quit in that cat. I love that. I'm going to make this work. There's no quit. That's the attitude traders have, right? Just, we're going to make this work. I love that. And then here is happy cat. Okay. Let's get to the before and afters here. Euro US. You've got the left side chart here. Sands indicators. You're going to see a theme here. How do I know when to buy? Let's start breaking these down. How do I know when to buy? And why am I going to buy? Green grab candles. Green means we have organized bullish momentum. Green means you're looking for one of two things. First of all, you have a bullish bias. That's number one. You can do one of two things. You can play breakouts through resistance that's automatically plotting on your chart. This is automated, gang. I didn't draw any of these. If you were to plot these indicators on your chart right now, you'll see exactly what I'm doing, which is why I love the fact that with these indicators, I literally am hacking 30 years of skipping college classes, passing on happy hours through my 20s, working weekends. I'm literally hacking all that, and you're seeing the charts the way a 30-year veteran would, automated. It's completely automated. So you could play breakouts if you like Momo, if you like momentum, you know what that is now. You can play pullbacks because those zones are identified as well as confirmed with the moving averages. So if I were looking at this chart, well, you know, where am I doing what? Gas pedal, hit, get ready. Gas pedal, hit, get ready. 52-week highs, still plenty of bullish attention. Don't underestimate the power of the spotlight that is shown on a market where we keep hitting 52-week highs. In fact, some of my favorite pullbacks happen after hitting a brand new high. So really easy pullbacks to buy. In fact, I guess this would be about a month ago, not even a month ago. I think this was about 3.5, maybe 4 weeks ago. We bought this market at 117.05. In fact, we were in the chat room. I think we were in the SO room together, and we bought 117.05. And I told everybody, be patient with it. Follow the wave. Don't get impatient. It might take some time to follow through. And that was when we made that 400 pip run to the 121 handle. 400 times 10, gang, per contract. Okay? So again, you don't have to guess. There's no manual drawing here, which is what I love. So when I look at, again, what is this? This is the Darvis 2.0 that's drawing the automated support and resistance lines. This is the propulsion indicator telling me when the market's hitting the gas pedal. And this is the 34 EMA wave. And I'll tell you what the 34 EMA wave is because, you know, this is a really simple one. This is the 34 period exponential moving average, one on the high, one on the close, and one on the low. The 34 period exponential moving average, one on the high, one on the low, and one on the close. And every one of these trades we were able to call in advance because these lines and levels are already being plotted. The moving averages are already showing you the zone that we're waiting for the correction down to. We already know the direction because of the color of the grab candles, all right? All right, so that's the euro. Here's Facebook. Same thing. What am I waiting for? Am I going to buy 175? No. I'm going to wait for the pullback. I'm going to wait for prices to sink down to my Darvis 2.0. I want to see that we're hitting the gas pedal again before the pullback. So I know that there's some bullish, near-term bullish momentum that's going to help me out so this market catches a bid after correcting. And you guys know what it's like when a market's correcting. It feels like the sky is falling, right? One day Facebook's a hero, the next day Facebook's a zero. And as long as we have green grab candles, support from our Darvis 2.0 and the wave, we know it's on a zero, it's just on sale. All right. And I was actually joking with some of the guys here. You guys might have heard this saying before. Wall Street is the only place they throw a sale and nobody comes. But how do we know the difference between a retracement and a reversal? That's the color of the grab candles, gang. There's no red here. There's the green that indicates bullishness, a little bit of blue that indicates some neutral market sentiment, but no red. No red. And we can still buy on red, but it changes the strategy. Remember I said once we get that grab candle shift in color, we know to trade, change the strategy. That's the point. That's the point. All right. Okay, so that's Facebook. This is Microsoft. This is actually a position that we took based on being more conservative. So what happens when you have bullishness? You know that the market's bullish, but it's being very volatile. All these blue grab candles, they do a couple things. They help you with position size, and they tell you to be more conservative. Wait for a deeper retracement. Wait for a deeper pullback. So again, that's how the colors can share with you or show you which levels and how much you should wait before you get in. So you'll prevent getting too aggressive, right? How many times do we get too aggressive and then we end up taking on a little more heat than we wanted? Heat meaning unrealized loss. When the blue comes in, what I want you to think about is, okay, wait a minute. My market stopped hitting the gas pedal. Where are my pink dots? They disappeared. Oh, wait a minute. Pink. So let me show you this a little bit more in detail. Pink dots disappeared. Not long after, blue grab candle arrived. Notice the pink dots gave me a heads up. The market quit hitting the gas pedal. It's still an uptrend, but I know I need to be more conservative. Visual cues, really simple visual cues. They're plotting or they're not. They're green, they're blue, or they're red. They're trading above the wave, the 3 moving averages, or they're not. So again, this is all about really hacking 30 years of just, again, making this simple. This is the aforementioned OIH trade. This was a great trade for us. But, and again, I want to emphasize less about how awesome this trade was, and it was, but more about what does this mean to somebody? What does that mean? This was when this market went on our do not trade list. In other words, we're shorting this. We've been shorting this for months. 4 months. We took the better part of about a 10-point move. Really easy peasy 10-point move to the downside. But here's when it went on the do not trade list because what happened? Well, I actually was hitting the gas pedal and then all of a sudden I got blue. So now there might be a little conflict. You're saying to yourself, well, the gas pedal, but blue. Checks and balances. We know no indicator works all the time perfectly. We know that. I'm not even going to kid you and say indicators work perfectly all the time. But notice these 3 tools, they act as checks and balances to one another. The propulsion dots were saying, yeah, the market still kind of got its foot on the gas pedal. But then the blue grab candle said, but wait a minute, there's some sentiment shift happening. And then the wave, the 3 moving averages, 34 EMA wave said, hey, gang, we've broke the top line yet again. Change your strategy. Get more conservative. Be aware the bulls are starting to take control again. We might get a short, but be more conservative. And then the blue grab candles came back. We thought, you know what? No dots. We've lost acceleration. And then, like I said, 3 days ago, we put this thing on the do not trade list. So this isn't just about making profits. It's also about not getting blindsided. And again, those are the cues I want you to notice. All right, I just went too far. Okay, this is rig. Another way we've been playing the crude oil story. This is a good example of when traders might not see when a market transitions from a really nice downtrend to chop. Can you trade chop? You absolutely can. You absolutely can. You can trade chop. But one of the things that market participants have to know is there's one strategy here, which I'll call swing. And there's another strategy here that I'll call exhaustion or fading. Knowing when to put away my swing trading strategies and utilize things like the squeeze, the RAF, the slow stochastic, things that I was not interested in that here. All of a sudden I know the slow stow is going to be my friend. The RAF is going to be my friend. I could find squeezes. That, knowing that indicator matrix is huge. Again, when the colors change, when the directions change, when the market behavior shifts, I go right to that matrix and say, wait a minute, what are the characteristics? Now, what are the indicators that are going to be the best kind of formula, if you will, for me to tackle this market? So again, this isn't about, hey, look at all these great swing trades I had, which we did, but how do I keep from getting blindsided by transition? And how do I know when to shift my strategy? All right, and by the way, as you guys are asking, there are no settings. There are no settings to tweak at all. There's nothing you have to do other than just activate them. You know, I like light switch indicators. They're on or they're off. There's no settings here, gang. They are always plotting in the same way, and that's what I love about these. There's very little subjectivity to these whatsoever. All right, this is the Australian dollar, which is another currency that's been, it's the Australian dollar futures, for you futures traders out there. We actually just bought this today, and it followed through already to one of our profit targets. What do we see? A little bit of gas pedal, visit to the wave, and then look at the beautiful automation. So quick heads up, I know there's going to be support. Propulsion dots telling me the gas pedal's back on. Green grab candles telling me that I got to buy. The wave telling me where to buy. That's it. Propulsions, again, telling me that I've got bullish momentum on my side. The Darvis telling me where I can start thinking about it, confirming it, and the wave giving me the zone. Over and over and over again. Another example on Lockheed Martin. We've done this a number of times throughout the year. The NAS. The NAS is an interesting one. I kept this one for last. I'm short the NAS right now. I think I told you guys that already. Why am I short the NAS right now? This is really, really important. The NAS has not hit brand new highs like its cousin, the Dow, the SPOOs, and the Nikkei. How do I know that? Well, obviously we don't see little cyan dots, which I love seeing. I haven't traded up into this area. 6,000's been a resistance level. How do I even know to watch it? Thank you, Darvis 2.0, for just making something pretty obvious, even more obvious, because I'm not having to draw anything on this chart. So I know this market's choppy. How do I know that? Take a look at the colors here. Red mixed up with green, that's chop. Look at all this blue. That's chop. Red, blue, green. Even though a lot of traders might view this as an uptrend, this is chop to us, meaning when the market reaches the range extreme high, which is identified by Darvis, and the range extreme low, which is also, we have multiple levels we can look at, but it's also identified by Darvis. I know to think about activating, again, a different indicator matrix in order to start thinking about how I would buy. But right now, I gotta wait. This is a short. This is a short, and this short off the 59.95 level, pre-identified by the automation of the Darvis 2.0, gets me short, and today we're taking the first of maybe 2 profit targets off the table. We've already taken our 55 here off the table. Awesome. I love that. That happened at the onset of our, actually, where is that now? Let me take a quick peek. I think it's starting to simmer down a little bit, but not before it gave us a chance to, yep, gave us a chance. It's pulled back, but hey, this is a great way to kind of kick off an early look at Friday. So that's what's happening on the NAS here. Okay, so we talked about the indicators. Again, I hope right now you're not having to avert your eyes. It's really simple. Again, color-coded, look at some dots, look at some lines. I'm using 3 indicators here, gang. No paralysis by analysis. It is not allowed. 3 different indicators. The Darvis 2.0, the grab, and the wave, which are really one tool. They're really based upon the same 3 exponential moving average settings and the propulsion. All right, so what is the grab and the wave? Let's kind of to recap here. Yeah, if I knew how much I'd be using grab and wave, I was using this when my trading partners were my 2 beloved dogs, Indy and Shauna. They're the ones I talk to all day. If I knew then what I know now, I would have named get after myself. No kidding. Why did I call this thing the wave? I used to skip class in high school and surf. The grab, this stands for green, red, and blue. And if I haven't mentioned this, by the way, gang, to folks who are interested in learning more about these, I'll tell you about the upcoming course we've got next Saturday. Yeah, they're free. Gratis, my friends. All three of these, all right? So, again, what are the green, red, and blue? Color-coded simplicity. Take the guesswork out of identifying the trend. I've shown you not only how they identify how to make money, but when they transition, how do you adjust position size? How do you adjust strategy? The organization, when you get the blue, it's just a quick warning. It warns you of those shifts. We've seen examples of that. It shows you when the markets transition into chop, hence my short on the QQQs. It pinpoints the retracement zones with accuracy. That's what those three moving averages do. Again, simplicity. What about the automated support and resistance, aka Darvas Box 2.0? We've taken something that really has been around for, was it 60 or 70 years? We've made it better. We've made it better. This is Darvas Box 2.0. What does it do? It automates support and resistance. And you know what's interesting about what we do with 2.0 is, number one, it's not about just finding new highs and new lows. We're finding much more nuanced levels. And I love the fact that it works on any time frame, any market. I showed you guys Forex, futures, and equities. And this is a big one. And maybe this only means something to me, but I think this is a big one. These are not projections of support and resistance. These are actual levels where the market has responded, and based upon a calculation, pinpoints what those inflection points are going to do, most likely, because we've already responded to them. They've actually responded to levels before. They're proven. And I think that's huge. We're not guessing and hoping that maybe that projected level is going to act as a ceiling or floor. It has actually acted as a ceiling or floor before. We've caught a bid. We've run into offers at that level before. That's unique. In fact, other than horizontal support and resistance levels, channels, things of that nature, most styles of support and resistance are projections, not Darvas. So again, you've noticed it takes the guesswork. I'm not, and we kind of joke about this here in the office, I'm not drawing precious little snowflake levels on my chart that I see. I'm drawing lines and levels that are automated, that are objective, they're unemotional, and they're proven to be effective because they worked before. They were support or resistance before. So that's what Darvas Box 2.0 does. Propulsion, this is brand new. This is brand new. I was actually going, like I said, I feel like Indiana Jones, and I was going through some of the old tools. I was reading Mastering the Trade Again. You know, it never hurts when the guy is next door and I can go pick his brain. And, you know, I was looking at this propulsion indicator. I said, wait a minute, this is such a fantastic complement to the wave and grab, because it kind of looks inside the wave and grab to get the nuance of where the market is hitting the gas pedal. And the more I used it, the more I just visually fell in love with it, because it turned on and off to let me know, okay, market's coasting again, still bullish, but I'm not hitting that gas pedal. And for momentum players, you're going to love this. And, you know, I'm trying to give my Momo players some love here, because if you don't like playing exhaustion and you're looking for the Momo, this is going to be a tool you love. And it's, again, no settings. It's either on or it's off. It's either showing you that the market's hitting the gas pedal, or it's not. So what is propulsion? Again, when is the market hitting the gas pedal? Know when we're experiencing increased near-term acceleration. It's an ideal complement to the wave for market trends. Kind of gives you X-ray vision into the wave. You know, the wave is still telling you, I think, a broader story, but it's kind of X-ray vision. It's nuanced. It's pretty awesome. It's an additional early indication of shifts or accelerations in momentum. An acceleration would be a shift, or again, when we're backing off, when the market's taking its foot off the gas pedal. And it's a simpler way to see near-term shifts in any market. In other words, again, when the market lets off the gas pedal and then we plot a blue grab candle, what is that telling you? Visual tools right? You won't miss the message of the market because it's just color-coded and plotting on your chart. Okay? Have I run out of cats? I think I've run out of cats. There's no more cats to show you. That must mean the presentation is done. No, I'm kidding. Let's go ahead and take some questions here. So I've shown you my body, my gold, my euro, a whole lot more. The simplicity of it. Again, even a newbie just turns these indicators on and you can instantly read the chart. Now, are there nuances? Of course, I've shown you a bunch of them here. You know, the dots plus the blue. What kind of strategy would you use? What's my indicator matrix? You know, there's some other things that will give you a better, clear roadmap. But what I've taught you here, alone with the grab and the wave and the propulsion, should keep you out of a lot of trouble. Instead of looking for the market falling through a ceiling, you might say, wait a minute, we might actually pull back. Let's say you got in with a momentum play and you were not aware of potential exhaustion, and now you are because of the propulsion or because of a blue grab candle. Can you imagine how much better mentally you're going to handle a pullback in the market where normally, you know, you might be, you know, I don't know if I can rewind back to unhappy cat. But yeah, you might be in unhappy cat mode, but now you know, okay, you might be in this mode, like what is happening? But because you know visually, hey, wait a minute, this is normal. The bullish bias is still there, but I lost a little bit of near-term propulsion. I might witness a little bit of a pullback. Where are some of the automated support and resistance to catch this? So you can adjust your risk tolerance and not let go of a great trade too early. A lot of traders do that. They just play the momentum, and because the next day we don't get the higher high, they're freaking out. I said, wait, no, this is fine. It's just a function of the kind of strategy you use to get into the market. Accept the pullback, don't lose faith in the setup, and you can get the definition of when the market could find the resumption of the trend. Okay, so you don't have to be sad cat, right? You don't have to be angry cat. All right, so again, that indicator matrix process is really important because, again, once you get certain types of candle colors and the propulsion disappears and the market begins to flatten out on the angle of these three moving averages, there are a lot of cues. Okay, so let's tackle some questions. So first of all, thank you, gang, for coming out today. I'm so pleased that you guys made time, and I am appreciative of, gosh, thanks for all the questions. I'm going to try to get through all these as I can. And again, these indicators are free. But what I hope I've also shown you is, and I would love for you guys to put these on your charts, stat, and they are available for Thinkorswim. They are available for TradeStation. And what I want to be able to do is show you how to use them. You know, I've been using the grab candles for a lot of years, and let's just use the word borrow. A lot of other traders out there borrow these. I'll tell you a funny story. I was at a seminar not but a couple of years ago, and there was 5 or 6 speakers. And I'm sitting there, and wouldn't you know, 4 out of 6 or 5 out of the 7 speakers were using my grab candles. They didn't call them that. Some of them changed the color, and I'm just sitting back, and I was so flattered. I was so flattered, but I'm thinking, wow, you know, they're not even using it right. So they found my indicator, they liked it, but they never bothered to learn how to use it, and they weren't optimizing their trades. So I was very, very flattered by that. But they're out there, and you can use them. How can we get the indicator? Well, you're going to learn how to use them in the class, but you can get them in the trading app store and TradeStation, and they're available on TOS. But again, I want to caution you guys, unless you can find these nuances and you have that indicator matrix, I just don't want you slipping into trouble. But I will tell you, and I feel very positive about this, if you do nothing but understand the nuance of the grab alone, it will absolutely be a sea change, a massive, massive improvement to your trading, because you will know, okay, I think I should use a choppy indicator type strategy here where I'm expecting exhaustion versus, you know, expecting follow through. And if I do play momentum and I lose propulsion, what does that mean to the kind of heat, the kind of pullback that I should be calibrated for, that I should brace myself for? All right. Okay. Let me grab some Some questions. Lydia says, every time I walk, there's a cat picture. That's awesome. Cats rule the internet, and apparently they rule trading too. All right. Is the Darvis 2.0 formula identical? Jerry, it is not. It is not. It's a different calculation. I'll talk about it in the class that we're going to have next Saturday, the 23rd. There are some nuances. You can use the indicator. It's out there for you guys. But the 23rd of September, not this Saturday, next Saturday, we're going to be doing the class, and I'm going to share with you my entire indicator matrix. The way that I utilize different indicators, how we go through the step-by-step of, all right, here's the blue, now what do I do? We lost propulsion, now what do I do? The wave is flattened out, what indicator should I use to confirm the trade? But no, it's a little different. It's not bad. It's a little, but it is a little different. Okay? Let me grab a couple other. Yeah, panicked on my dollar. Oh, the dollar Canada. Oh, let me pull that up for you, my friend, because that has been one of our monster winners here for us. So when I walk you through that again, let me let you guys know again. How can you instantly hack, shortcut, 30 years of blood, sweat, and tears? And any of you who've been trading for any amount of time know all three are involved as you're learning how to trade. How do you learn the obnoxious profit method? All right, so we're going to be doing this on September 23rd. It's a Saturday. We're going to be spending 5 hours together. Get a good night's sleep beforehand, because if you think today was, drinking through a garden hose, wait till I start really sharing with you guys all the things that I've been doing throughout this year, as well as giving you guys insight to what the next Euro-US trade is going to be, what I actually think the Fed is going to do, and how I feel pretty confident about that, and what kind of opportunities might arise. Do you guys have any questions about, by the way, the indicators, how to get them, where to get them, how to sign up for the class so you can learn how to use the indicators? There's a number you can call. The site to check out what we'll be doing, and I wish there's an easier way to share this with you guys. Okay. There we go. So let me talk a little bit about that dollar Canada. Dollar Canada, whether you're playing the Canadian dollar futures or dollar Canada, is a perfect example. Of the way in which the grab and hang on, I'm actually reading while I'm talking, which I really should knock off. But it's a perfect example how the grab and the Darvis and the wave kept on the right side of the trade. It's amazing, actually. So, in fact, let me pull that up right now. And again, it's simplertrading.com/profits. Actually, no, there we go. We do have an awesome little link. It's simplertrading.com/profits. All right. And if you have any questions, there's the number. All right, let's pull up this dollar Canada, because I do want to show you. And the reason I want to show this to you guys is because what happened to my awesome chart here? Hang on. I want to show this to you because the dollar Canada has been a monster winner for us. I didn't use it as an example, but I could have. Look at when, and we just had that surprise rate hike from the Bank of Canada. We've been shorting this for a while. Our most recent short was 27.30. 27.30. That was almost 600 pips ago. Okay, that was almost 600 pips ago. Red, 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 a little bit of blue. What did that blue tell me? I lost the foot off the gas pedal, get more conservative, and we shorted. But we never thought about anything but the short. This will keep you from getting ambitious in the wrong direction. So, when you talk about panicked, this is going to keep you from panicking, because what you're going to get are parameters around, okay, I need to give the market a little bit more latitude. The flow of the river is still heading south. Great. But we're hitting a little bit of an eddy, if you will. visually you can see that. Then we have, let's see, let me tackle a few more questions here. Do I mainly trade the daily chart? You know, I'm grabbing some of these dailies because I think some of these are they're just visually easier. But do we play intraday? Absolutely, Daniel. If I was grabbing a bunch of 5, 15, or 30-minute time frames, heck, you could look at 1 minute, 3 minute. In fact, let me just show you right now. So let's say I turn, and if there's a symbol, I'm happy to do it. So let's grab the 5 minute. Okay, same thing. Gas pedal, green, transition, absolutely. But what I will tell you, and I'll teach you how to do this in the class on Saturday because this is huge. You have to have price movement range expectations. You have to have an understanding of when the market is changing its follow through. This actually is affected by time of day. This is affected by time of day. So one of the things I teach you guys is if you're trading a 5 or 15-minute time frame chart, how many points of follow through should you expect? You know, and I have a tool I use that is also free that shows you, okay, if I'm trading the gold market between 8 and noon versus 8 p.m. and midnight, if I'm trading a 5-minute chart versus a daily, what type of typical price movement range do I get? And the way in which you can place your stops and profit targets will absolutely change the way you take advantage of your profits. You won't get too greedy. You'll not smother your trade. That's one of the things that we utilize along with this tool. And you can see right here, this is an intraday rollover. What happened? Green, 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 lost the gas pedal. So immediately, I'm not thinking bearish. This is happening right now. And this is what's so great about these tools. They look, when you go back in history and say, okay, I see exactly what Raghee's seeing. Again, what are you doing? You're shortcutting, you're hacking 30 years with these 3 tools. Propulsion disappeared. So I'm aware that we could be losing some bullishness. Blue grab candles appeared. Well, if I did buy, it'd be with smaller size. The blue grab candles persist. The red starts showing up, and what happens? The dots are back. But what are they telling me now? Bearish momentum, gang. Bearish momentum's coming in, and we're watching it happen right now. And every one of these is automated. So when you go back, like, okay, I saw exactly what Raghee was seeing. What else do we do, by the way? Oh gosh, this is such a great example. Broke Darvis, plotted propulsion, plotted red. That's it. So a little bit of this risk aversion's unwinding, as you can see. But we're still, I mean, we're 15 points into this here. We're still about 10 points into that trade on the daily. But this is a look at the 5-minute. So I love that. And does it work on intraday? You're looking at it right now, my friend. Okay, so let's see. Let me tackle a few more questions here, gang. And again, thank you so much for your questions. And all right. So again, I want to emphasize on Saturday, September 23rd, I'm going to be teaching you how to use, by the way, these tools, and they're available free with every one of these packages. Typically, you know, the option most people take is the live trading, because what you guys will be able to sit down and watch is how I use these in a live market. And these are 2 full days of live trading. So we're going to take advantage of the early U.S. session, and I'm going to take you right into the early part, or kind of pre-Asian session. So you'll be able to see the entire trading day with me. So we'll do that for 2 days. So this is kind of, all right, you can learn how to use the indicators, which again are included here. Indicators are included on all 3. Okay. And then the live trading, you'll see how I put that together, whether that be the daily, whether that be the 5-minute. Doesn't matter. How I day trade or intraday trade versus how I longer term swing trade. We'll get to do this together on the 26th and 27th. Again, 2 full days. All right, next up here is, yeah, the Darvis 2.0 is a little bit different. We are working on it for TOS, Bob, but we have it for TradeStation. And again, if you have any questions about the indicators, just give us a call, and I'll be more than happy to I mean, they'll be more than happy to help you out. And I know I'll keep you guys in the loop, but does a tool apply to 30-minute charts? Absolutely, Andrew. Absolutely. It's called the propulsion indicator. So the question is, which indicator plots the dots? That's the propulsion indicator, which I will teach you how to use next Saturday. All the details. Because notice how, again, I love the example of the OIH, because any one of these tools on their own, I think, is amazing. But the three of them become checks and balances. The three of them become just and it's the simplicity of not having to use anything but these three. But the three of these really make sure that if you're being very bullish because of the green grab candles and you lose propulsion, you can adjust your position size and at least be ready for maybe a blue grab candle and maybe a transition. It gives you that heads up. So the three of these together really makes a huge difference. And then if you want to know if we're breaking down or higher through support or resistance, it's automated with the Darvis. So I think the three of them are really powerful in that regard. And again, propulsion is, imagine, putting your foot on the gas pedal or coasting. You're still heading down the road, but the difference being the speed at which you do it. Gold or crude? Sure, I'll be happy to take a quick peek at crude. Sure. We took that trade on the daily time frame today. And actually, you can see my notes from our chat session, which is great. And I was highlighting all the different levels in the Darvis. Actually, this is the second time in about a week that we've shorted crude, second time. This was the Irma setup, play from right there, that yellow arrow, and we closed that into the Friday session. That was good for about 2 points. And then today we grabbed 50.45 and 49.95. And again, those were Darvis and what I call a psychological level. And why do we short? Look at the mix, gang. Green, blue, red, no propulsion, resistance, choppy market. I look for the overbought sell. So that's what crude oil looks like. So thanks for the question there. And that's a trade that we have going on right now in crude. So Brian, there you go. Is it parabolic SAR? Taz, I don't use that, and no, it is not parabolic SAR. Nope. So David, that's the same question you had about crude. There you go. Is propulsion 10x? No, you know what? I'm glad you asked about 10x. This is not the same as 10x. And I actually use, when John showed me what he was doing with 10x, and let me see if I can't, I actually use 10x alongside the grab, because conviction and clarity, well, not to mention the alliteration, conviction and clarity work together. Yeah, and I use this alongside 10x. In fact, when you learn the matrix, that indicator matrix, one of the matrices is how to use 10x and that was something I added recently. So again, one of the matrix is, how do you use RAF? Which environment, which color-coded candles and propulsion and wave angle is for squeeze? Which one is for 10x? Which one is for a number of different tools that I like to use? And that's part of the matrix that I'm going to teach you guys on Saturday. Absolutely. Let's see. Let me grab a couple other. Do they conflict? I actually like to set them up side by side. All right. So that's something that, again, part of that indicator matrix that I talk about, that's something that I'll do. So I won't keep 10x all the time, but again, once my grab candles behave in a certain way, then I know, oh, well, let me go take a look at 10x, and am I losing conviction? So it works. It's very hand in glove. I just don't lay them on the chart at the same time. So I'll know, because of the grab and the wave, to turn certain indicators on. So many of you here probably have a lot of indicators like I do. How do you know which ones to use? How do you know the underlying market trend psychology? How do you know which one to use? And that's what the grab will do. So I know certain behavior on my grab and wave and my propulsion, and I'll turn on or off certain indicators. So I'm always using the best indicator for the underlying market trend. All right, gang. So, and that's, again, part of that matrix that I'm talking about. And again, if you have any questions about which platforms this works on, just here's a number. They'll let you know. Yes, they are free. They are awesome. But you notice, and this is just what I was able to show with you guys in 60 minutes, all right? When we get to sit down for 5 hours and I get to walk through all the details of trades that I have coming on now, trades that I'm going to be putting on later, intraday, end of day. There's a lot of nuances for how to use these. They're fantastic. I think they're very intuitive. That was one of my criteria for clarity. But again, when you know when to put them together, you learn the checks and balances. And then when you have the extra added matrix, you know exactly what to do. You're not going to be grasping for, well, am I using the right indicator? And is the best one to use right now? They all have a lot of use. It's just knowing which one to turn on and off, right? The analogy I use is a bag of nails and a bag of screws. No one's going to argue that those aren't perfectly good building tools. But if you have a hammer, it's obvious which one you need to use, right? Yes, these indicators are free. I'm going to teach you how to use them Saturday the 23rd. And then also teach you how to utilize a lot of the indicators you already have. And the good thing about, you know, having those 5 hours together and us being together, if there are indicators, you say, well, Rog, you know, what kind of matrix would I fit with this indicator that I love? What's the best way to use it? I'll show you the formula how to figure that out. It's not difficult. It's really a matter of understanding what the grab, wave, and propulsion are telling you. You love the cats? All right. I'm a dog fan too. I'm a dog fan too, but, you know, cats rule the internet. Okay. As far as the color of the lines, it has to do with whether or not they were plotted off a high or a low. It has to do with that. The colors really don't matter. They just happen to differentiate whether or not it was a high or low that the box was drawn on. Okay. Sounds like it would make sense to set up an FX account. You know, Ace Money Man, well, first of all, I love the name. You know, it's funny you mention that. So one of the things that we're doing here, and I don't even, oh gosh, I'm not sure who I'm going to upset by saying this, but I'm so glad you mentioned it. I love Forex. I've been trading Forex for almost 2 decades. I'm just going to put this out here. The first 50 people to sign up, and I don't know if someone's going to come storming into this room, but the first 50 people to sign up, we're doing a live Forex workshop in Dallas. We'll give you guys VIP seating, and you know what? I'll give you my Intro to Forex course. All right? So folks like Ace Money Man are saying, wait a minute, Rog, you just pulled basically per contract 13,000 on the euro, and there's some other setups happening. Yeah, it makes sense to set up an FX account. Absolutely, my friend. So I'm doing a free workshop in Dallas on Forex. So if you want VIP seating, and I'll throw my Intro to Forex class in there, so you guys are really ready for that. So just make sure you tell, yeah, just mention that when you guys call in or whatnot, and I'll make sure I take care of you guys. So for those of you wondering, yeah, I want to get in on something like that Euro trade, you bet, you bet. Dallas is going to be October the 7th, and they'll give you all the details when you guys call in, or we'll give you the details once you sign up, and make sure we get you a login for everything and the indicators and whatnot. So we'll be doing that. And again, the class is the 23rd of September, not this Saturday, next Saturday. But one of the things I want to mention for you guys, we're going to be doing another deep dive on Tuesday. So the cool thing about just kind of getting started, getting familiar with the indicators is you can join me next Tuesday for a post-close session. So just a quick heads up there. We'll have instruction on these indicators, but the cool thing is, I don't know that we could, they're just so simple. They're shared charts on TOS, and they're easy to install in TradeStation. All right? So thank you again for all the questions. Thank you again for all the questions. Absolutely. So Darvis is a tool that's native to TOS that is absolutely free. You can install it right now. Darvis is a tool that's available in the Trading App Store in TradeStation. You can install it right now. What you're going to learn to do is put all these together. You know, that's really what it's all about, that indicator matrix. Okay, so what else do we have here? Again, if you guys have any questions, you know the number. We'll get all the information to you. There's a lot of questions here. Thank you so much. I'm trying to get through them all. Okay, what else do we have? Give me 1 second here. As far as the indicator platforms go, Liz, right now, TradeStation and Thinkorswim. Yes, TOS and TradeStation. That is correct. And again, once you guys sign up, they'll send all the details for the indicators out to you all. Okay. Hang on here, gang. All right, so you need a cat post that says, hang in there, baby. I thought that's what that grumpy cat, man, that is what a trader is. That grumpy little cat, man, that is what a trader is. Just persistent. All right, so, oh, man, Sandy, thank you so much for signing up. We will make, if you're interested in Forex, let us know. We'll make sure we get you the intro and get you that VIP seating for Dallas if you can make it. Oh, awesome. So, hey there, Sandy. Great to have you. Ryan, Scheller, Scott, I'm looking forward to seeing you. Awesome. All right, very cool. Very cool. Carmen, all right. So make sure you let the customer service folks know if you are thinking you can attend Dallas. They'll make sure they take care of you to give you all the information, and we'll make sure those VIP seating is ready, and as well as the Intro to Forex class. So very cool. Okay. All right. Gail, thank you so much. You enjoyed the session. I'm so pleased. And I hope that, again, when you use these tools, and again, the 34-period exponential moving averages, you can put the wave on your chart right now. A lot of you already have grab on your chart. A lot of you already have it, but I think a lot of traders have these color-coded candles but really aren't sure what to do with them. Or even more so, have the color-coded candles but aren't sure which other indicators and strategies to utilize when the colors change, right? But if all you do for now is just don't fight the colors, all right? Just don't fight the colors, okay? And a lot of you are already utilizing these tools because, you know, you've downloaded them from TradeStation and whatnot, so yeah, absolutely. Like I've said, a lot of people have borrowed grab and wave for years, and you know what I'm hoping people will do is learn how to use them right, and then again get that indicator matrix so they know of the tools they've got and the best strategies to deploy once those colors change. All right, I think we're pretty much caught up here, gang. So again, if you have any questions about Dallas, if you have any questions about the indicators, you can plot wave on your chart right now, gang. Same thing with the grab. You can actually plot those in your charts right now, and I'll teach you how to use them better. What else do we have here? Give me 1 second. Just taking a look at a few last questions here. I think that's it. All right, great. Well, again, thank you, gang. Again, the class will be Saturday, the 23rd. I look forward to seeing y'all there. The Dallas event is October the 7th, and we will be doing another deep dive for folks who sign up. And, you know, one of the things I want to mention again is the live trading is great, and a lot of the trades, actually every one of the trades, we put a spreadsheet in the Simpler Futures area. I have a spreadsheet of trades. So the crude oil trade, the euro trade, the Canadian dollar trade, the NASDAQ trade that I showed you all today, even some of the stock trades. These are all discussed in the chat room. So every one of these were trades that were taken either in the chat room or on the spreadsheet. And you can get the spreadsheet in the Futures Gold, in the Futures membership. If you're ready to want to take a deep dive in that. And I think you're going to get a lot of that live. When you get to see the tools at work in a live, kind of like the way we're watching gold just now in the 5-minute, I think it's a really helpful thing to have. Okay. All right, gang. Thank you so much. I hope you all have a great day. There is a trading room, yes. And again, if you have any questions, just call and they'll give you all the details about the site as well. Right, what's included in the site? Absolutely. Absolutely. All right, let me see if I haven't missed anything here. A lot of questions scrolling by. Thank you, everybody, for your patience. All right. What's the difference between studying a strategy? It's the indicator, Joe, versus what the indicator tells you to do. That's probably the most basic way to describe it. Okay. Steve says you're loading the wave and the grab and the Darvis and your toss right now. That's awesome, Steve. Love it. Chanel, just give them a call and they'll let you know how to attend Dallas. So yeah, just give them a call and we'll make sure that we'll have a seat for you. If you sign up for the course and you can't make Dallas, BC, yeah, I'll still make sure you get that intro. Yeah, so if you sign up and you're interested in Forex, you bet. You bet. We'll still get you that intro to Forex course. You bet. Okay, gang. To those of you that I didn't see or get to your question, again, my apologies. I hope most of your questions were covered in our discussion. So thank you, Lisa. I appreciate that. And I'm just scrolling up and down the chat here. Okay. All right. Again, I want you guys to think about, again, put those 3 moving averages on your chart. I think that alone is going to start to make a huge difference. Is the market trending above or below? What kind of angle are they moving at? If you add the grab candles to the mix, it just continues to add more and more depth to the analysis. All right, gang, I will see you on Saturday. And some of you I'll see some of you on Tuesday as we get started, getting a jump start on October. I am super stoked about that. Thanks, gang. Be good to each other. Appreciate the time. Talk to you soon.